Today we are very pleased to have with us Mike Lai, Director of Pheim Investment Asset Management. Mike, how would you describe your investment philosophy or style of your funds? Do you go about it top-down or bottom-up approach?
Well, we have a mix. We don't, our philosophy is basically the bottom-up, but in certain times also we actually use top-down approach. But we try to not to invest fully invest at all the times, because if you invest in Asia Pac, Japan, if you look at it, especially those emerging market, the volatility is quite high, and the emerging market they tend to have high beta, you see, and the corporate governance may not be that good. So because of that, sometimes we cannot be fully invested at all time. So when we try to have some cash at a certain level, especially when we think that the market is too rich, where the valuation is too expensive, then we keep more cash, you see. And that's how we actually position ourselves in terms of our asset allocation. So normally we go for top picks, bottom-up approach. Right. But certain occasions where we think that the macro economy are too important, we also use that approach. So it's a mixture of a top-down and the bottom-up approach.
I see. Yeah. All right. Then what should investors expect, or what type of investors would be suitable for your funds, say Pheim Asia X Japan Islamic Fund?
The fund was established back in November 2006, so it has been in operation for almost 5 years and 6 months. And we try to target the return of around 7% per annum on average, and we always get our investor to come in to have a long-term view. And it's a capital appreciation fund with growth, objective, and we try to deliver that kind of return. And we always advise our investor to take a long-term view of 3 to 5 years. Because if you come in 1 year, then sometimes the market can be quite bad. Like recently, what happened to Euro crisis, and that can actually cause the investor to be a bit panic and sell the fund, which we don't encourage them to do so. Because if you overlay it over the 3 to 5 years, actually the volatility can be evened out. So if you stay with us for 3 to 5 years, you probably get a so-called better average return, compared to you taking a more short-term 1 year view and all this.
Talking about the European crisis, what's your outlook on the market, and how would you and your team navigate through it via your funds?
I think the European market, there will be episode, you see.
Yes.
But generally, if you look at Asia, we are actually quite bullish in Asia Pacific as a whole, which we actually encourage our investors to come in, because if you look at it at the macro level, the GDP growth within the Asia country are a lot better compared with the Europe or US. The saving rates are higher, and if you look at it at the micro side, at the corporate level, the companies, after the 1997 crisis, a lot of companies actually de-geared in Asia Pac, so they're actually balance sheet, they are much stronger. The debt level are a lot lower, and some of them actually with net cash. And because of that, I think they're a lot more better now compared with 10 years ago, or compared with 1997. And we believe that once this Euro crisis has settled, the fund will actually flow back to Asia market. So at the moment, if you look at it, the valuation are neither expensive or cheap. But if you look at China, I think China has came down quite a lot over the last 2 to 3 years. The companies are quite attractive in terms of valuation. So we don't mind actually looking into China market at the moment, and start putting money, to position ourselves in China market.
Moving forward, what sort of sectors or maybe country allocation would you be overweight in moving forward?
I think we quite like the banks and the consumer, number one. In terms of country-wise, we like China, because the valuation is very appealing now. If you look at it, if just take for example the banks in China are trading at all single-digit PE. In terms of price to book, they are trading at close to 1 times price to book. Of course, they got some problem in China in terms of loan quality or whatnot. But we think that this kind of valuation is quite attractive, to buy some of the banks in China. Country-wise, I think that's the country that we overweight. The rest of it, like Malaysia, we actually quite neutral. Indonesia has actually fallen a bit. We don't mind look into it if the stock market actually fall further, because it's a growth country. Yeah. So I think within Asia, we are quite bullish in China. Sector-wise, we are very bullish on the banking and the consumer staples. We try to avoid the export sector. Yeah.
All right. With that, I have to thank Mike Lai, Director of Investments for Pheim Asset Management, for sharing with us on Pheim funds. Thank you.
Yeah. Thanks.